Good morning. Welcome to the Forex Pro Charts weekly trade results video for the week that began on February the 13th, 2011 and ended on February the 18th, 2011. So we are reviewing the last week and the results of our trade. Last week was a little bit of a slow week as far as trading in the zone and doing our standard setup Forex Pro Charts trades. We only had two currencies that we were able to take the standard trade setup on, and so let's go ahead and take a look at those. Okay, so the first trade was on the GBP JPY, the British pound Japanese yen, and you can see here, now this was the second revisit to this zone. Let's take a look at that real quick. Okay, so looking at the daily chart, we can see that the zone originated here. Price has already come back to the zone and moved down to here prior to moving back up all the way back into the zone. So this would be what we would call the second revisit. Origination, first revisit, second revisit to the zone. Now the GJ is, as you know, if you've been trading for a while, is a much more volatile pair than some of the others. It tends to move more quickly and have greater spikes and so forth than some of the other pairs. So this is another reason for caution also when you're trading the GJ. And as you also know, anything after the first revisit to the zone tends to weaken the zone. However, because the risk was relatively small and price had not hit the 60-minute armpit yet previously, we went ahead and issued a trade alert on this pair with the appropriate cautions in it, so that some of our more aggressive traders who would still like to trade this, we issued that trade alert. And as you can see, let's go and take a look now on the hourly. Okay, so here we are on the hourly chart, and as you can see, when price came up, it moved all the way up through the zone, bounced off this trend wall, came back down, bounced again, and finally went all the way back down through. Then, actually, interestingly enough, the next time it hit the 60-minute armpit, it did bounce for 20 pips before coming up and moving through that zone again. However, it did not. And even if you go down to the 15-minute and 5-minute charts, you will see that price just moved. It just looks just like this. Price just moved right on up through that zone, bounced, and then came back down. So for next week, and in the analysis we'll talk about this, that we're looking for price to continue up. However, this trade this week was one of our rare losing trades. If you had taken this trade, you would have been out approximately 35 pips, depending on exactly where you placed your entry and your stop. So all in all, that's a relatively small loss, 35 pips, when we lose so rarely. So while it was certainly disappointing and annoying, was not devastating. And if you're a more conservative trader who sticks very religiously with the odds enhancers, you probably did not even take this trade, because it was the second revisit to the zone on the GJ. So some of our traders were somewhat disappointed. Others breathed a sigh of relief that they stick with those odds enhancers, and escaped. But all in all, a fairly small loss, easily handled if you trade according to your trade plan, and aggressively protect your profits and keep your risks minimal. So again, this was a reasonable risk, 35 pips, and did not work out this time. But in the overall big scheme of things, very absorbable. So let's take a look at the second pair that we had a trade on this week. Okay, so our second trade this week was on the GBP USD, another British pound pair. And here we're looking at the daily chart. You can see the zone at its origination. Price moves down, comes back up. First revisit, hits the zone, moves slightly back out, and then back in. We did issue a trade alert on this again, even though it was the second revisit and price had not moved really overly far down this last time. We issued a trade alert with the appropriate cautions because of the presence of this monthly trend wall here. And this tends to make, this area tends to be a little bit more of a resistance. Price has a little bit harder time generally breaking through. And so again, for our more aggressive traders, this might make this tradable. The risk was fairly reasonable. We'll take a look at it on the hourly chart here in just a second. You'll also notice that we have a second zone immediately above, coming almost up to the weekly armpit. So all of this indicated to us that, that there was a good likelihood that price would reverse somewhere in this area, that under this monthly armpit is a good place to see the bounce. However, does raise some red flags that price may move through. Let's take a look at the hourly chart and see exactly what happened. Okay, here we are in the hourly chart. You can see price came up to the daily armpit, moved back down, came up to the daily armpit, moved through, came up here to the 60-minute armpit at 1.6217, and as you can tell right here, price bounced when it hit, and that was for a total bounce of 39 pips, so you would have had your 20 pip bounce right there. Then price did come back up, move through the 60-minute armpit, and move right up to the monthly armpit at 1.6257, I believe, and then sure enough bounced. And so far, this is of course obviously right at the end of the week. So far that has bounced for 28 pips. We would not be surprised to see this bounce back down at least to the 60-minute armpit and probably down to the daily armpit before deciding which direction it's going to go. And from there it could either reverse and go back up into this upper zone, or go ahead and move back down. Either way, this zone, looking at this and then at price moving up here, this bottom zone I think we're going to indicate is going to be too risky to trade, and we will probably be cross-hatching that next week. The zone above it we may be looking at for a trade. But right here, if you took the 60-minute armpit, you would have seen a little bit of a bounce for your 20 pips, or depending on how you handle that, a maximum of 39 pips. If you waited for this, or if you traded this in addition, then you could have added another 20 or 28 pips to your total and probably still have a portion of your trade open. Also, if you just trade the 60-minute armpit, but you leave a portion of your trade open or don't move your stop all the way to break even at the first bounce, then you will still have a portion of this trade open and could still see some additional profits next week on this. So all in all, not sorry about that. My mouse was stuck. All in all, not a great week, but not an abysmal week either. Probably just about broke even when you get right down to it. Lost a few pips maybe, depending on exactly how you handled your trades. For more, now remember, these are just our signature trade setups. Some of you, these come, sometimes we had an excellent week 2 weeks ago with I believe 5 currency pairs that we traded for a total potential of 700 and some pips. Last week was about 68 pip potential, and some of those trades would have garnered additional pips this week. But for the 2 trades that we had this week, that's where we were. And for more information on our signature trade setup, or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. Looking at our charts for the week upcoming, the week beginning February the 20th, looks like we have several pairs poised to go into a zone, so we're expecting another good week next week. And we welcome you to our site where we have a 1-week demo. You can get full access to our analysis and alert services, and see how you like our trade setup. Look forward to seeing you.